Hello and welcome to my channel. In this video, I will show you how to account for supplies and record the adjustments for supplies. Supplies are current assets that represent the cost of supplies on hand at a specific time, for example, as of the end of the year. The supplies asset account is classified within current assets because supplies are expected to be consumed within 1 year. The account is usually listed on the balance sheet after the inventory account. A related account is supplies expense. It is an income statement account. The amount in the supplies expense account reports the amount of supplies that were used during the time interval indicated on the income statement, for example, in the month of December. Let's look at a couple of examples to learn how supplies are purchased and used. In the first example, the balance in the supplies account before adjustment at the end of the year is $6,000. We need to determine the amount of the adjustment if the amount of supplies on hand at the end of the year is $2,500. To calculate the adjustment amount of supplies used during the year, we subtract supplies on hand at the end of the year from the balance in the supplies account before making the adjustment at year end. By subtracting the $2,500 of supplies on hand at year end from $6,000, which is the beginning balance, we determine that the supplies used amounted to $3,500. Before recording the adjustment, let's look at T accounts and review the rules of debit and credit for supplies on hand and supplies expense accounts. I'm posting the link to the rules of debit and credit video here and in the description below. Supplies on hand is an asset account. It is increased by debit and decreased by credit. An account's assigned normal balance is on the side where increases go because the increases in any account are usually greater than the decreases. Therefore, the normal balance is on the left or debit side of the T account. Both the beginning and ending balances are on the left or debit side of the T account. To record the supplies used during the year, we need to decrease or credit the supplies on hand account by $3,500. The offset account is supplies expense. Expense accounts have the same rules of debit and credit as asset accounts. They are increased by debit and decreased by credit. $3,500 is recorded on the left or debit side of the supplies expense account, increasing supplies expense. Since there are no more transactions, the ending balance in the account is also $3,500. Now we can record an adjustment for supplies. Adjusting entries ensure that both the balance sheet and the income statement are up to date on the accrual basis of accounting. You can find more videos about adjustments in the playlist The Accounting Cycle, Accruals and Deferrals. The link is posted here and in the description to this video. To record supply consumption, we debit or increase the supplies expense account for $3,500 and credit or decrease the supply on hand account for the same amount. Now let's look at the second example in which we calculate the amount of supplies purchased. In the second example, we assume that the supplies account has a $1,600 balance at the end of the year, and the supplies expense account has a balance of $3,400 at December 31st, year one. We need to determine the amount of supplies purchased during the year if year one was the first year of operations. Since it was the first year of operations, the beginning balance in the supplies on hand account is $0. The beginning balance of supplies on hand plus the purchases made during the period minus supplies used during the year equals to ending balance of supplies. In this case, supplies expense, which is $3,400, is the amount of supplies used during the year. Since it is the first year of operations, there is no beginning balance of supplies. The ending balance is $1,600. By rearranging the formula, the supplies purchased equal the supplies used, $3,400, plus the ending balance of supplies of $1,600. This means that the supplies purchased during the year amount to $5,000. This is how the T accounts look like for this example. The beginning and ending balances of the supply on hand account are on the left or debit side, and $3,400 of supplies used is on the right or credit side of the supply on hand account, as it is decreased the account. Purchases increase the balance in the supplies on hand account. Therefore, we record $5,000 on the left or debit side of the supply on hand T account. Now let's prepare a journal entry to record purchases of supplies. When supplies are purchased, we debit or increase the supplies on hand account for $5,000 and credit or increase the accounts payable account for the same amount, assuming supplies were purchased on account. Accounts payable is a liability account. It is increased by credit and decreased by debit. You can learn more about this account by watching the video Current Liabilities. I will leave the link in the description to this video. Same as in the first example, the adjustment for supplies is recorded as a debit or increase to supplies expense and a credit or decrease to supplies on hand. If the amount of purchased supplies is immaterial, many companies choose to simplify the process and record supplies directly to the supplies expense account. In that case, the purchase of supplies is recorded as a debit or increase to supplies expense and a credit or increase to accounts payable, assuming supplies were purchased on account. I hope you found this video helpful. If you did, please make sure to subscribe, hit the like button and ring the notification bell so you are notified when we release more videos like this. Visit my channel for more videos on financial and intermediate accounting. Thank you all so much for watching, and I hope to see you all again in the next video.